Welcome to our eSignal Weekly Forex Forecast. My name is Jay Norris. I teach the art of trading at Trading University. First market we'll take a look at will be the Australian US dollar. Here's a daily chart of the Aussie USD. Let me pan out to a weekly chart and show you where we're at here. Big level just ahead in that market. Essentially that spells out the top of your long-term primary pattern. So big resistance, a move above that would obviously be significant, and it would also probably point to an uptick in the global economy overall. So definitely a level to watch here, 78.03 on that long-term chart. We're going to do something a little different today too, because these markets really are wound up kind of counter trade markets. We're going to go intraday. We're going to show you what we see as shorter term opportunities. The market's been really good to us, good to myself for sure. The last couple of months, the last month really, just been coming up roses for us. Here's the Aussie on a short-term chart. It's a 4-hour chart. A lot of lines on there. I apologize for that, but it's a pretty bullish chart overall. And that you've got your longer-term patterns here. You got your 30-day, your 60-day. They're all pointing up. And you got some pretty good support too on those purple lines too. So a lot of support down below. We like buying dips on the Aussie as swing traders and as shorter term traders. And 78 even, that's a big level. We think that that's where that market's going to test. Next market, we'll take a look at the Swiss franc. We'll cover the daily chart first. You can see that market's really been wound up in a sideways range now for some time, really since the spring. But from our perspective as swing traders, as shorter term traders, man, it's really been a playground for us. And I'll show you what I mean. You'll see it when we pop down into that 4-hour time frame. There you can see it. It just keeps bouncing back and forth between resistance points and support points. Here you had a great swing trade setup right there, right at the end of the week. Pow! And look at where it went right to the next resistance level, and that's all that market's been doing. And what's really cool about the methodology we follow, essentially the indicators, you're looking at those lines. As markets tend to go sideways, those lines tend to tighten up. When a market will break out, those lines widen back out. It's essentially we're just mimicking the pattern of the market that we've seen over and over the years. And there's no doubt in our mind, markets are fractal in nature for sure, meaning that the lower time frame patterns tend to mimic the higher time frame patterns, and there's times where you'll see nothing but lower time frame patterns just reiterating themselves when you're in a sideways market. On the other hand, long term, there's times where definitely the higher time frame patterns will exert themselves, and we're really good at knowing when to trade with the short term patterns and then when to move along and invest with the higher time frame, longer term patterns. And I really think that's the magic of what we did, and that's why we've been so successful. Boy, the last month has just been nothing but watching this market bound back and forth between our pattern lines. So there you have it. But back to the Swiss franc there. Sorry, getting a little excited. On this chart, short term, there's really not a whole lot to do because this is what we call a market that's in balance here. Look at that. Your 60-day pattern, you had a great swing trade off of there, sure, but there's nothing to do short term because you've got boy, look at that. It's kind of a barbell effect there. The 60-day and 6-day are up, but the 30-day and 12-day are down. So that would be a market you tend to avoid as a short-term trader. Even as a swing trader now, there's nothing for us to do until you got up around 98 even. So you're just going to maintain your longs from that support level at, 96.5 there. Next market we'll take a look at will be the dollar index. We think long-term that, and I say long-term, I have to pan all the way out to a weekly chart, that this is a bull flag in the dollar. And if you look at that, you really start to see it. You had a massive rally in 2014, and then you've had nothing but consolidation ever since for the past couple of years now. And we think that will break out long-term on the upside. And really, that's the only way to look at that. You got to step back, and that's how we view the U.S. dollar right now. That's the dollar index itself. Let's go to the euro next. Here's the euro on a daily chart. Similar, we see this period that you've been in now for some time. Boy, I have to pop right back out to that weekly as just a bear flag. Market going sideways, consolidating prior to the next leg. And we think that pretty strongly because number one, demographics, and a huge difference in demographics in the U.S. than in Europe. They're really favorable in the U.S., not so much in Europe there. go down to a more tradable chart for us, the 4-hour chart, and there you could see it again how tightly that market's wound up. Really not a market for us to be leaning either way unless we got an opportunity to short it up around that 30-day pattern line right around 112.80. Well, you know what? I stand corrected. Technically, that 6-day is going to shift on today's opening. So we'll be buying dips short term in the euro. It looks like you'll have the 6-day, 12-day, and 60-day all up. Therefore, you have the majority of patterns higher. So we'll definitely be buying dips. Currently, it's showing down. That 6-day is down. You closed above it though. Technically, this chart's waiting for the opening of the next candle to shift that 6-day. Yeah, there you go. There's something to do. Potentially buying dips in the euro short term. Market we'll take a look at will be dollar yen, and here's a really exciting chart for us longer term. Let me shoot out to a weekly and I'll show you. There you can see that market found pretty good support in there. You found support right at the 50% retracement here. Let me show you the 50% retracement of that entire move, and sure enough the market started to find support there again and again. Now you have on the weekly chart, you could see it, you have a nice potential head and shoulders building there, and we think that long term that you're going to sew in a nice bottom there. There it is on the daily chart. You're starting to see it. There's nothing to do just yet, however. I mean, unless you're a long-term investor. I was telling a buddy of mine online, an old friend of mine who back when I worked for Daiwa Securities 100 years ago, and he was saying he likes dollar yen down here. I was saying I like dollar yen down here. I think it's a buy as an investor, but I don't think quite yet as a trader. And when I say that, I mean as an investor, sure, you can start nibbling it, start buying it, but not necessarily as a trader. As a trader, you're going to use leverage. Leverage, a very dangerous thing, right? That's why we put a disclaimer at the beginning here. So you got to be really careful with leverage. So I like buying dollar yen cash, but maybe very, very small position leverage, but not ready to go leverage yet. And I'll show you exactly why. There you see it. See the red lines above that? Those are pattern lines, essentially. 60-day pattern down, 30-day pattern down, 12-day pattern down. Majority patterns are down, right? Only that little 6-day down. Now, for sure, you're balancing above 99, even big support there. On the other hand, you know, it's not quite ready to turn down yet. If anything, we'd still be selling rallies short term here. I'm not gonna, because I don't want to get potentially kicked in the teeth by a breakout here. So I'm just going to sit and watch because I like it long term. I like it as an investor, not quite as a trader. We like to trade with the majority of your lower time frame patterns, your 6, 12, and 30. Currently, the majority of those patterns are down, so that's where we're at. Let me show you another really cool chart here that is actually, if I'm not mistaken, we're clear to buy dips in here short term. Here it is, Aussie yen. Jump out to weekly. Really like this guy long term too. And there you had Aussie yen bottomed just above 2/3, right in there on a Gann line. There probably is a 625 in there. So long term, beautiful pattern, just a massive rally, and then you had that correction, nice clean, predictable correction, and now it looks like potentially you're in an area now where you can end that correction, and we'll see what happens from there. More likely, from our perspective, you get a pretty good rally. That's the weekly chart, so you can see it long-term support holding there. Now we'll go intraday on that really cool 40-minute chart that really cool 240-minute chart that's been really successful for us, and I made a nice short-term trade off of that, I think 2 weeks ago. Sometimes I'll post those trades on LinkedIn too. But here you have it, Aussie yen. Here's a market where you have the majority short-term patterns up. You can't really see the 6-day being up because it's the same. It's at the same level as the 12-day. Here you look at my box there, and yeah, you have the 6 and 12 are up, but the 30 is still down. So the majority short-term patterns higher. So you were clear to buy dips in Aussie yen, and we think that's another one to be watching for sure. Thank you so much. My name is Jay Norris. I teach the art of trading at Trading University, and we'll see you next time.